Jerry Mercer, CEO of Matador Capital, and I got Latham.
I am the president of National Title Group, and I am happy to be sitting with you and talking about all these cool subjects.
Awesome. All right, so I just wanted to go over, we run a lot of our deals through here. You're actually also a Matador Capital investor. We thank you for your investments.
Extremely happy to be one.
Thank you. Thank you. I just want to kind of talk to you about what really happens. How does a property transfer? How does this all come together once a contract comes into a title? What happens, and then in the end, how does it transfer over?
Right. Well, after a broker or investor goes and works their rear end off to get a deal under contract, then we get involved, and we are working with a buyer and seller. We're working with a seller to clean up title. We're working with a buyer and their lender to meet any expectations to have the title in a certain format, because we're going to provide an insurance policy that tells them that this property is free and clear of any issues other than what we outline. And those banks are going to lend you hundreds of thousands of dollars, if not millions of dollars. They want to make sure that they're in the first lien position.
Okay, well, let's back up. What is title?
Yeah. So title is two policies that we're typically providing. One to the owner, an owner's title policy, ensuring them that they know everything that affects this property now and into the future. And if we have not discovered something, and something from the past negatively affects that property, that's a title claim, and that is a financial payment that's made out to that owner. The second policy is a lender's title policy, otherwise known as a mortgagee's title policy, and that is the lender is always wanting insurance that they are the superior lien, they're in the first lien position, so no matter what happens, they have the leverage if the stuff hits the fan.
Okay, and you want to be in the first lien position because first lien is first and right.
Yep, and has the ability that if they're not getting paid on time, that they actually have the ability to foreclose at that point without having any other lien holders in the way of them foreclosing.
Okay.
Yeah.
All right.
And so those two, we send out a commitment. It's kind of a preliminary agreement, like this is what we're agreeing to do. That's when we get lenders and buyers and their attorneys kind of cutting through that, either asking questions, requesting additional endorsements. A deal you did recently, your attorney wanted to make sure that you had an access endorsement to get all the way over to Plano Road through this large industrial park.
Yep.
And there's no one else in the transaction who is ensuring an owner or a potential owner that they have the direct access that's needed, or ensures them that there's no restrictions that are being broken on a certain asset. And then that even though we're in title, we are also the people who are working with the surveyor. We are the ultimate middleman, and so a lot of times we're facilitating the survey, but more importantly, we're also the only ones who's willing to ensure the accuracy of the survey. So surveys are obviously important for many reasons. You want to be able to see what you're buying.
Yep.
You want to know what's affecting it. Speaking of your brother Jeff, right? Yep. He's utilized survey coverage before. Yep. He's dealt with a survey that was inaccurate, and he thought he owned more land than what this survey portrayed. And we had an underwriter come in, literally negotiate with the neighbor, and buy the strip of land that he originally was under the impression that he was getting per this survey. And so we are also, separate from providing title insurance, an endorsement to that title policy can be actually us ensuring the accuracy of a survey, because there's a lot of mistakes made on surveys. Constant.
And so you're actually going to taking someone else's work and taking the risk that it's going to be accurate.
Yes, because we have the benefit of our title data. So if there's any easements, if there's anything that's of record that is not showing up on that survey, we then inform the surveyor and they add it. But then there is some risk involved as well, because we are only as good as the public records, except for what's provided in the survey. And so at that point, we have to trust the survey. And so the lenders on every single transaction require survey coverage. And it's actually, our industry provides that to them for free, compared to on a commercial transaction, that's 15% additional premium to get that coverage. But usually it's a lender's not going to have a financial burden due to a survey issue. It would take a lot for it to affect the lender, but an owner like yourself could be affected a lot quicker by something being inaccurate on the survey.
Gotcha. Okay.
Yes, sir.
All right. So once the commitment comes out, everybody's attorneys gets involved.
Yes.
They probably start making comments, and then
Lots of them.
and lots of them,
Yeah.
lots of comments, lots of really long emails,
Yes.
bullet pointed emails.
They're providing in the contracts that a lot of brokers or agents are dealing with. They're filling out the section that has objections.
Yep.
And a lot of times they're not exactly, usually an agent or broker is not involved in the objections. It's the buyer or their attorney. But that is what that is there for, is for them to object to anything that they're reviewing in the commitment, title commitment,
Yep.
and anything that they're reviewing on the survey. So I can't express how important those objection periods are for people who are out there doing deals. And they're also another way to move away from a deal if the seller can't meet those requirements.
Yeah.
So it's a big kicker in a contract.
And sometimes if you don't make your objections in time,
You lose that right.
you lose that right. Then you could have your earnest money at risk.
Absolutely.
Yeah.
Absolutely. And if you make objections, and there's objections, like I said, that the seller can't meet, that buys you time down the road to possibly get out of a contract. So even by going through the process of making objections, even if you know some of them aren't realistic, it allows you an out possibly down the road.
So like,
Are we
so-
telling all of our secrets?
We might be. So I've got one.
All right.
So like oil and gas easements.
Yeah.
Like get that removed.
Yeah, good luck.
Impossible, right?
Yep.
Okay.
But that can be objected to, and if the seller can't meet that objection,
Yeah.
the buyer has an automatic out
Yeah.
with receiving their earnest money back. And when people are stretching for deals, and when I say stretching, when they're trying to make more appealing offers, people are putting more earnest money down. People are putting quicker timelines down.
Yeah.
So you have to watch the happy medium of being too aggressive with contract terms and not leaving yourself enough time to actually review the stuff that's coming back. We'll do a lot of deals that the earnest money is hard pending the review of title and survey only, right?
Yeah.
So someone being very aggressive, but you got to allow the review of title and survey, otherwise you can't be assured of what you're buying
Right.
or what the risks are behind the property.
Right. And a lender wouldn't even loan on it anyways at that point.
If there was...
If they waived their right to the title, I mean, the lender could have issues with the title policy that was issued that would
Right, so that's why...
maybe keep them from committing to doing the loan.
Correct.
Yeah.
Correct, 100%. That's an absolutely true statement, yes.
Yeah. So, okay, so you get through title commitment.
Yep.
Everything's good there. Buyer ends their due diligence period. What happens next?
You know, hopefully the title company has done a couple of things. We always do a critical dates letter without fail, right? So everyone needs to be on the same page on time frames. And then we are putting out our requirements and our needs list at the very beginning. And so if I were to give any advice to people out there doing deals, it would be pay attention to the title company's request early on in the transaction, because those are the things that end up haunting you when it comes time to close if those needs haven't been met.
Yeah.
Because the information that we could receive could cause delays on us being able to close. So being diligent in getting the title company their requested items is huge. And so that has to do with authority documentation, which I've seen you talk about authority doc some.
Yeah.
So who has the authority to sell this?
Yeah.
And who has the authority to sign on the debt to close this? Because in the end, we're perfecting the lien.
Yeah.
So like I said, the lender wants to know that they're in the first lien position. We have to perfect that lien, knowing that the person signing it and the collateral that it's being placed on is all accurate. And so then we're working with the seller on any kind of payoff. We're working with the taxing authority to know what annual taxes are so that we can therefore turn around and prorate. Most standard transactions have an equal proration, meaning that it is based on the time of year that you close, right? And the seller puts their credit in for the first half of the year. The buyer gets that, and then the buyer becomes responsible for the remaining part. For the remaining part, but they have the credit from the seller, so the buyer therefore has to pay all the taxes when they come due. And in our marketplace, that happens in October, and then you don't have to, they're late as of January 31st, right? And then we're working with the buyer and their new lender, and then we get preliminary settlement statements out. There's a lot of there's a lot of invoices that go on in there, right? There could be appraisal invoices, there could be survey invoices, there could be the commission and disbursements, right? So we have to have those instructions. There are legal fees, either by a buyer's attorney and lender's attorney. And so all of those different items, we like to get into the settlement statement so everyone can start chewing on that a little bit. And then it also, somehow that triggers everybody to be like, oh, I forgot that I was gonna add this in there. So we're getting sellers and buyer settlement statements accurate, and then we are teeing up closing. And a lot of the closing is dictated around a lender's closing instruction letter. So the lender is saying, Mr. Title Company, we're willing to send you the docs and therefore send you the money after everything's executed if you agree to handle this transaction with certain terms, right? And you've dealt with different lenders. Some of them require originals in their hands, right? Some of them will go as far as even require that you go in the title company to sign the documents, right? And so every lender, and then some will just allow it to be via a scanned copy, which is more reasonable. But these lenders have a whole array of different criteria that have to be met in order to get the funds from them. So we collect the funds from the borrower, we get documents executed, we send those documents back to lender for review. They then send us their money. And one thing that I would mention in regards to that is don't do any Friday closings because there's always extra time that could be needed for wires or FedExes or scans or whatever it may be. So, we love kind of an early in the week or midweek closing to give everybody a couple of buffer days. Because if you close on a Friday and it doesn't fund, then that seller all of a sudden is carrying that interest all the way into the next week, and the seller's not happy about that. Right. They can maybe carry it for a day, and we usually put a day buffer in our payoffs to circumvent any extra money. Because the worst thing for a title company is to either go back to a buyer post-closing and say, hey, you owe more money, or go back to the seller and say, oops, we sent you too much money. That's when we've had a bad day at the title company. And then we organize the closing. And in today's world, signings are happening every which way there is. We can do a full remote online notarization. If you're a U.S. citizen, but you're in the middle of Austria, we can get them closed via video. So that is a nice convenience that has taken place over the last few years. The mom and pops still like to come into the brick and mortar title company and sign their documents and ask their questions in person. I have plenty of commercial brokers who tell me that they will never come to a closing again. Just sometimes there could be some, I don't want to say retrading, but someone might say, oh, we had this last minute expense, why don't we take it out of your commission? So if the broker's just not there, they're not as susceptible to that conversation. And then we fund the transaction and we pay off the seller's note. We split up the money either on the tax expirations, or actually if you're doing a deal after the tax bill has come out, you have to be prepared as a buyer. You have to be prepared to pay those taxes in with the seller. So the seller and the buyer both put money in at that point, because we have to ensure a lender that all taxes owed are paid.
So the bill comes out in October, so any transaction after October, the taxes are getting paid at closing.
At closing. Where any time previous to that, the taxes aren't actually owed at that point. So we're collecting them, and then it's up to the buyer to pay them once the bill comes out.
Once it comes out. Okay, cool.
So we were talking about conveyances, and in most commercial contracts, it is the contract will read that the property will be conveyed via special warranty deed. And a special warranty deed is a seller that is actually conveying and warranting title from the minute they bought it going forward, rather than from the beginning of time and the beginning of that property. So most commercial assets are sold via special warranty deed rather than a general. Also, that makes a lot of sense for anything that's being bank owned or anything coming out of an estate or a trust, because they only know so much, so it's limited. And so that's the special warranty deed. I always tell people that if someone's arguing over a general rather than a special, they're arguing for no reason. Ultimately, if the title company accepts the deed, then they're getting the comprehensive title policy. They don't care what it is. And then people get confused. People refer to the deed all the time, but there's also the deed of trust, which is the security instrument for the bank.
Yeah. All right, Latham, thank you for your time. That was
Yes.
very informative. I hope a lot of people get something out of this, and people can use you for commercial and residential, and I really appreciate your time.
Yeah, happy to do it. Enjoyed it.